Greetings, members, one and all of the Salivation Nation. A very kind viewer sent me a link here asking an interesting question indeed about central banks' accumulation of gold this year. This comes to us from Vox Markets out of the United Kingdom. And the question raised is, are central banks buying more gold in anticipation of a shift in global economic power? It's a very good question. It's a question that probably could have been asked back in 2013 as well. We'll take a look at that here soon. But central banks have upped their gold reserves at the biggest rate in 3 years in the first half of 2018. In the first 6 months of 2018, central banks added a net total of 193.3 tons of gold to their reserves, an 8% increase compared to the previous year, and the strongest first half of buying since 2015. This was driven by three main buyers, Russia, Turkey, and Kazakhstan, who accounted for 86% of central bank gold purchases, Russia buying 383.3 tons, Turkey 125.8 tons, and Kazakhstan 125.8 tons. For more in-depth numbers on these, check out the research of Small Gold. He has done extensive research on the buying of major central banks and countries, both gold and silver. There are new countries that also got involved, with Indonesia, the Philippines, Thailand, and India buying gold after a period of absence. The latter was the first time since 1978. It's according to a report from the World Gold Council on the first half of central bank gold buying trends. We'll take a look at that here in a minute. The IMF says that central banks now hold 10% of global FX reserves. That's 101.3 trillion tons, or $1 trillion, and accounted for 10% of the demand for the first half of the year. So what's driving this gold demand? One of the main reasons, according to the article, is why central banks have upped their gold buying in 2018 is diversification, which would be a wise move. And I would think that would be the reason why they accumulate gold every year. The World Gold Council argues that central banks in emerging markets want to use gold as a hedge against the US dollar and the renminbi, as well as currencies like the euro and that face political and economic challenges. And that's exactly the reason why you and I hold gold as a hedge against economic instability and our currencies, because the dollar is strong right now, but it's still going through an inflationary movements. In other words, it's losing at least 2% each year, and in fact, that's become the target of the Fed when it raises interest rates to keep that inflation rate at 2% as a target. Wouldn't it be nice if there was no inflation whatsoever? It would be if we had a very strong and stable dollar. The World Gold Council says, against the backdrop of persistent low and negative bond yields, the limited high-quality investment options, it makes sense for central banks to turn to gold as a means to increase portfolio diversification. But it's not just currency risk that these central banks are hedging. In an environment of heightened geopolitical tensions, gold is an attractive asset because it is not anyone else's liability and does not carry any counterparty risk. And as you remember, in World War II, a lot of European countries, especially the United Kingdom, had their gold shipped to New York to protect itself because, it's against the German army, the Nazis, getting their gold, because that's one of the things that the Germans did when they invaded a country. They took their gold. Now, the reason central banks in emerging markets are buying gold could be to maintain a certain allocation level as the global gold reserves increase. A third driver mentioned in the report is that some central banks are upping their gold levels because it enables them to actively manage their liquidity or boost returns through leases, swaps, and other transactions. It certainly does give them more clout, a nation more clout, if they have a stable monetary assets such as gold in their vaults, for sure. Both Hungary and Argentina use their gold reserves for these purposes in order to meet short-term needs. And as you remember, Venezuela sold off, I think, some gold to help their situation. Of course, when you have socialism, you can sell off all the gold you want that you may have in your reserves. It's how you spend that money that makes the real difference once you do. Let's see here. Speaking about the increased demand for gold, Robert Monroe, the head of business development at Hummingbird Resources, says we've been very encouraged to see central banks increase gold reserves. As a gold producer and Falili and Mali, we believe the intrinsic value of gold as a commodity is a safe haven asset and inflation hedge. That's for sure. So the central banks are really, accumulating gold for a lot of the same reasons why you and I do. For sure, and silver too, but really more gold in this case because gold tends to be more treasured, and you can store a lot more value in a smaller space, which is obviously crucial and important as to why is the case, why the central banks do, and probably why you've seen a lot of these governments, or even the United States, get rid of their stockpile reserves of silver. I mean, they have enough to accumulate and acquire for their minting of coins and the like, but nonetheless. So here is where another question, the answer to the question above, about an economic power shift. What are the potential long-term implications of these short-term buying trends? The World Gold Council argues that these trends could reflect a shift away from the system dominated by the US dollar to a more diverse multipolar currency system over the next few decades. Now, you may remember I think it was in late 2016 the IMF met, and there was some speculation that they may be conspiring or in talks with a lot of the BRICS nations to create a pool of currencies to compete with the dollar as a world reserve currency. We really didn't hear much out of that, which makes me think that it probably didn't happen, as the many of the gold bugs probably would have, and silver bugs too, precious metal bugs would have probably made a big deal about it. And the report says the long-term shift could bring a renewed focus on gold as a strategically important reserve asset over the next few years. And it's considered as an asset class with a liquid market. Gold could be used by central banks to adjust reserve compositions in anticipation for rebalancing of global economic power. Now, if that is the case, that would mean that they may be anticipating, possibly, although we're going to take a look at this chart here in a second, which could call into question some of this, or it could really bolster the case. But that is that I believe that if there's going to be a reset of the number one world reserve currency, which will be the dollar, it will happen before there's a huge crisis. It will happen knowing that a crisis will be coming, so that they can be prepared to probably prevent it. Now, what that new reset will mean, I don't know. My guess is they're going to probably make it so that folks like you and me, or others that have other things, that are not going to be caught, losing our shirts, so to speak, on our regular assets or money markets or investments in the type, which means that gold and silver may not go as high as some people think they could if there is a reset. But the anticipation of it is that there may be enough of one that it could certainly justify accumulating more gold. But here is from the gold.org, the World Gold Council's website, talking about the accumulation. Central banks are an important part of the gold market. First half of 2018, they accounted for 10% of demand. Looking ahead, we expect central bank demand to remain buoyant. Diversification will continue to be an important driver of demand, as will the transition to a multipolar currency system over the coming years. This is right from World Gold Council's website, so consider the source, but we're going to kind of pick this apart and kind of see if we can make some sense of it. A solid start to 2018. Central banks added a net total of 193.3 tons of gold to their reserves in the first 6 months of 2018, an 8% increase from the 178.6 tons bought in the same period last year. This marks the strongest H1 for central banks gold buying since 2015. There you can see it. And the first half, although It's not as high, obviously, as 2015, but it is higher in the previous 2 years. So that's just the first half. What will the second half bring? Well, in some cases in 2015, they increased. And if the prices stay low, I believe that they will buy more. I believe that's what happens whenever prices are low, is these nations buy more. It's a good deal. In 2013, we saw the highest accumulation, especially for the first half, with a lot more, almost double more, really. And so, with that being said, well, what were they thinking in 2013? You know, we just gotten through the economic crisis. Prices were starting to come back down, and maybe their thinking was exactly the same thinking as as the World Council thinks now, and that preparing for some inevitability with the a multipolar currency reserve system, or a shift in the dollar's value, or a reset of some sort. My guess is that's not the case, as they would probably be accumulating much more because the price is much lower now, I think, than it was then in 2013. But nonetheless, we have much less buying now. It's up a little bit more than 2016 and 2017, but I really wouldn't be that alarmed over it, really. It's always gold that they're accumulating more, because these are stacked upon prior years. And look, we see in 2010 there was hardly any buying, especially in the second half of 2010, unless there's no data available for that. But nonetheless, even in 2011, when prices started to climb, they accumulated a lot of gold. I think everybody was scared back then, but I think it would behoove these nations to accumulate as much as possible to protect themselves for the reasons mentioned before. So what are your thoughts? You think it's you think the buying activity is a hint of what's to come with the of a shift in global economic power? My answer is probably not. But what do you think? I'd like to extend a multitude of gratitude to y'all for watching, and encourage you to please rate, comment, and subscribe.